Welcome to Telltales. I'm Mike Nicoletti. Every week, along with my co-hosts Jason Wallace and Hunt Lawrence, we bring you the cash flow memo. Get it at telltales.us. For the next 30 minutes, we're going to dive deep into energy, technology, and healthcare. So download the memo now and get started.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
Exhibit C hasn't changed week to week. What is changing is macro stuff. And in the intervening time since last Wednesday, the U.S. announced sanctions on the two largest Russian oil companies, Rosneft and Lukoil. These companies are large. They're half of Russia's production. I'm not quite sure how this all works out as a practical matter, but it definitely helped the price of oil. And I would say the help is kind of wearing off now. I just don't know how to estimate how much of a difference it's going to make. So I think we just defer till next week. The Trump administration has been focused on their meetings in Asia with China. So, that's taken up this week. On Exhibit B, the bottom, you can see that the price of oil, which as of last Thursday had improved quite a lot, was trading at 62. And as I say, each Wednesday, the backwardation is less. The 26 strip was 60. With the oversupply in the market, the oil price is down full $10 from either 25 average. It averaged 73 and 24, 63 this year. This year is almost over. The strip is 60. So is that enough of a decline to curtail oil production both in our country and other non-OPEC areas? I think so. So that'd be the argument that with Russia, Ukraine kind of intractable, the thing would hold around 60. But having uttered the words, I don't know how much credibility to give that thought. The price of natural gas did a little better. The 26 strip got over $4. As I say each Wednesday, it's very disappointing. LNG, which was flat, 24 versus 23, is up nicely in 25 and will be up again in 26. But the thing that's fallen down is power. And as near as I can tell, from looking at numbers and discussing with people in the power business, it's because more coal was used. As the price of gas went up, it became more economic to run the coal plants harder. Under the Trump administration, the coal plants aren't being closed. That's the explanation there, I guess. I think gas should trade closer to $4 than $3.50, but it's a little bit like expecting oil to hold at $60 rather than trade down on the 50s. There's no question that you need these kinds of prices to keep production growing or not declining. Can't rule out seeing something. I don't think we do 240 like we did in 24, but I can see 26 coming in at, 320 or 330, down from 360, which will be the average for 25. As I always say on Wednesday, if you own oil and gas producers, hold them. If you want to add to those positions or you have your eye on another oil or gas upstream company, I put off for another couple of months establishing a position or adding to a position, because lower oil and gas prices, those companies will trade for less. Exhibit A, not too much more to add here, although the deficit should come down in 26. Part of that, if you look up in excise and other, part of that is increased revenue income from tariffs. Part of it is kind of doing some holding the line on spending. Part of it, I think, even though there's more debt outstanding, interest rates will be somewhat lower. And so the cost of interest, which we read about this all the time, is more than defense. The only thing that that exceeds it in this cash flow statement is Social Security, estimated next year 1.65, and Medicare estimated next year 1.20. So interest is really a big factor. I do believe that if the Trump administration can continue to make progress on the deficit, they can, say, an estimated 27, go from 1.55, which is the forecast here, down to 1.30, 1.25. I think at some point we'll get close to $1 trillion deficit if we get that pattern going. The reason $1 trillion deficit is important is if you go down to the end, the last line here of Exhibit A, the debt held by the public as a percentage of GDP was around 80% in COVID. With the spending in COVID, it went to 98%, and we kind of hung in there. Last year it was 102. It would just be absolutely terrific to have that start to trend down. It's not anytime soon going to get back to where it was pre-COVID, but to have it, in 27 and 28 go from a 102 as a projection here in 27, 26, have it go to, 98, then 97 or 96. That would be a terrific outcome. Mike, Jason, anything else on the macro stuff?
Well, since I was in Canada last week, I should bring up the trade tensions between the U.S. and Canada and the advertisement that stoked some discourse over the weekend. It was interesting being over there, mainly because everywhere you went, it was very buy Canada. So there seems to be a turn of a more like, let's try to favor our domestic producers. I heard a lot of people complaining about having to drink Canadian wine, which I thought was kind of funny. But yeah, they really missed their California wine. So how that works out with their trade negotiations, we'll see. It seems like that's a lower priority than China, obviously. So we'll see when that gets dealt with.
The next feature is the history of blockchains. And rather than just a history activity, those with the 20 pages, if you turn to page 7, two of the very best investments to have owned over the last couple of decades are Mastercard and Visa. They have pretty good conversion of their revenues to free cash flow. Visa's a little larger and has $21 billion of free cash flow, $38 billion of revenues. Mastercard has $15 billion of free cash flow, $30 billion of revenues, 50%. So it's really quite remarkable when companies can do that, just it includes CapEx and CapEx. Now, neither one of these companies has much in the way of CapEx. These have been really good investments. They trade consistently for around 30 times free cash flow. So the free cash yield's around 3%. Here, the interim results are tracked, but the revenue and the free cash flow is up in the 10 to 15% range. I used to own Mastercard, and unfortunately, I sold it. One of the things I always worried about with Mastercard was, can blockchain be competitive? Never having been interested personally in cryptocurrencies, still people would say, yeah, but the technology, the blockchain technology is really important. I didn't sell the Mastercard stock because of that. I had a different problem with Mastercard, which was they have this litigation every year from retailers, and they just spend a lot of money on the litigation. And then every couple of years they have a settlement. It seems to go on and on and on. And I just made a mistake selling what probably would have gone up 2 or 3 times from there. But with that as an introduction, I want to turn over to Jason, and he'll give us a history of blockchain.
So blockchain and Bitcoin trace its origin back to 2008 paper published under the name Satoshi Nakamoto. Well, really, Bitcoin goes back to 2 prior ideas. One of them was DigiCash. It launched in 1990. It was the first anonymous digital currency company. It kind of pioneered the idea of using cryptographic keys to send money digitally and anonymously. but it was a company and the product didn't take off, and ultimately they shut down in 1998. The second was something called the cypherpunk movement. It was really a group of libertarian activists that were programmers, computer savvy, and pushed for anonymity online and also the freedom from any central authority. So that group started pioneering and developing a lot of encryption protocols and concepts of decentralized computing. And one of the members is actually cited by name in the Bitcoin paper, and that's Adam Back. So really inspired by them. And the Satoshi paper combined these ideas into creating a purely peer-to-peer electronic cash system. So the idea is the system is not reliant on any financial institution or trust of any kind between the two parties transacting. And a key thing is that paper explicitly does say that they're trying to create an electronic cash, which is counter to what you hear cited pretty often today, that it's not a payment system, it's a store of value. And that could be true, but the initial idea was this is something we need to be able to send payments. Primer on how it works is Bitcoin's an internet protocol, essentially, that processes and stores transactions. When someone wants to send a coin, they digitally sign that transaction and send it to the network for processing. Transactions are batched into blocks, and those blocks of transactions are then time-stamped and cryptographically hashed. And that's what happens at the miners. So the miners are allowed to assign the timestamp if they're the one that guesses each block has a value in it. And if you're the miner that can guess the value, that when it's hashed, it computes a special number that's in the block. And that's the proof of work. It's a computationally intensive task. It's essentially guessing a lot of numbers to compute that. And if you're the miner that computes it, you process that block's transaction and you get a reward. So this chain of blocks is the blockchain, because every block has a reference to the previous one. When I say hash, the important thing to know about a hashing algorithm is it takes an amount of data and it produces a fixed length string of characters. And in Bitcoin's case, it's 64 characters. If you were to run a hash algorithm over the text of a book, and if you changed any single letter in that book, you get a different hash at the end. So that's why this hashing algorithm works. So following this paper, the Bitcoin network was officially launched in January of 2009, after the financial crisis. And the first block that Satoshi started the system with has some text in it that reads, "Chancellor on brink of second bailout of banks." So the Bitcoin blockchain is literally kind of built upon the idea of being anti-central banking. Very libertarian. These libertarian programmers adopted the network first. The first real transaction that they adopted the network for in the real world was on May 22nd of 2010. And today it's called Bitcoin Pizza Day, because someone bought a pizza, I believe it was Papa John's. They bought a pizza for 10,000 Bitcoins.
Whoa.
Very expensive pizza. Yeah. But at the time, that was worth, I think, on the order of like $30. So 2010, it doesn't really have adoption yet. The first really path to adoption for the Bitcoin network was processing transactions on the Silk Road. So there's a great book called American Kingpin about the history of the Silk Road. It's a fascinating read. But essentially that would you call it e-commerce? I don't know. It's an online marketplace. It was set up to sell hallucinogenic mushrooms. So eventually it evolved into selling other drugs, weapons, data stolen by hackers, not the stuff you're going to order on Amazon. So it's hard to say if these cypherpunks that inspired the Bitcoin blockchain really wanted a system to just handle anonymous transactions outside of the banking system, or if they really were building something that could, process transactions for parties that can't be trusted, like hackers and drug dealers. I don't know if that's really their intention. I don't think anyone really does, but really in 2012 is when it started to gain kind of attention on the more mainstream news channels. That's when Coinbase was founded. The Bitcoin Foundation was set up to try to gain more use in kind of typical brick and mortar settings. 2013 was interesting. That was the year that the FBI took down the Silk Road operation. And in that, they seized 26,000 Bitcoins. But it was also an important year because it started gaining adoption. That was the year that merchants started to adopt it, and Overstock.com announced that they were going to accept Bitcoin for online transactions, which is a big milestone for them. In 2015, the number of merchants accepting Bitcoin hit 100,000. It was hard to find current numbers, but I don't think it's grown a tremendous amount from there because a lot of it's not used today for processing transactions. In 2017, it kind of went through an evolution. The code for the blockchain was, they call it hard forked, and they created Bitcoin Cash. So the idea was you increase the block size, you process more transactions, the transaction fees are lower, and it can be used for something like a traditional payment system. Some of the arguments were against it, criticisms for it were that it's creating cash, and it's creating money out of thin air. And that group particularly said that's something only central banks do, a fiat currency. So they weren't happy about it. It never really gained a whole lot of traction, and definitely didn't see the appreciation that a Bitcoin did. So I guess the last milestone I'll highlight is in 2024, the first real Bitcoin ETF launched. So a couple things to highlight about this story are core to the people that created Bitcoin. Satoshi is not actually a real person. It's a pseudonym for an identity of either one person or a group of people that wrote the paper, and they still remain anonymous. Bitcoin was definitely created with the intention of becoming cash. It's certainly not that today. It's proven to be a good store of value, but everyone's gonna have to make a judgment if it's a safe long-term storage of value. But it's certainly valuable today in the sense that people are willing to pay a lot of money to own and trade it.
The other thing I think we'll focus on next week is adoption by large banks and the difference between stablecoins and banks. I think we got at least another 10 minutes on this subject, yep. Jason. I think you'll agree.
Mm-hmm. Yep. Mm-hmm.
Chapter next, we will do Taiwan Semiconductor. And I was talking to Mike this morning, and Peter Thiel has some other way that he thinks from a venture capital point of view will challenge ASML and TSMC and whatnot. So when we get to 2 weeks from now, we'll get into those things.
Okay, let's take a quick break for a message from Oakcliff Sailing.
Hi, everybody. Dawn with your weekly update from Oakcliff Sailing. There's a lot of things that have transitioned. We've had the pumpkin regatta where we threw pumpkins in the water, and a lot of people went out on the boats and had a lot of fun picking up the pumpkins. No boats were harmed in the very windy conditions, but a few pumpkins may have been cracked in their recovery. It's a good way to practice with non-humans for man overboard drills. We also had the Halloween regatta, which was super exciting because one, there's fun dress up, but it was a grade 3 match race, and we had a lot of young people sailing. Even our internal team, Ethan Johnson, put together a team, and they were third, which was exciting to be on the podium. We are now moving into pulling all the boats out of the water, and we are into fundraising season. I think most people that are listening to this realize that American Magic has withdrawn from their campaign for the America's Cup, and that will mean that unless something changes, it will be the first time ever that there's not an American team in the America's Cup. At first, I was really disappointed and kind of confused at what I was feeling, and then I realized Doug DeVos and the American Magic team have done such an amazing job of trying to uphold the top of the podium. And in their release, they talked about building from the bottom. That is what Oakcliff's doing. This year alone, we have done 3 major events, which all have depleted some of our funds, but have given back to the community. One, last year, we went around the country to different regions and helped share and develop best practices for how can you as a region maximize your sailing, your community, your volunteers, your racing. Then we also did the Refit My Ride, which was service basically to the marine industry, but came from the collaboration tour on how do we take an older boat and refit it. And then we've also had an amazing year on the water, which is from the hard 15 years of work that we put in, where we're starting to be on the podium regularly again. We're holding 3 records as a nonprofit, sailing mostly with women and children. So we've had an amazing year, and now it's time for us to move into the fundraising season so we can continue, and we can continue to improve our equipment, our boats. We have a few boats for sale, but if anybody's interested in making a donation to help us get through the end of this year, it will be very much appreciated. Thank you.
And now back to the show.
The principal piece of information I think is significant on page 1 is the ownership of Microsoft and OpenAI is now established at 27%. That had to be worked through the California State Attorney General and lots of negotiation with the founders of OpenAI. It was founded as a nonprofit. And the thing that fascinates me is when we see a Microsoft 10K or 10Q, since they own 27%, will we see a summary income statement and balance sheet for OpenAI. The Microsoft earnings are today. I'm sure they'll file their 10Q promptly, so we'll see when that shows up, what to make of it. Other stuff on page 1, I guess the Apple 17 is what do they call it, a refresh cycle? Apparently it's doing good for Apple. It's certainly doing good for the Apple stock, but they still are way short on software, as Jason always points out to us. And they seem to have kind of a potential lift in their cash flow and a lift in their stock price. Jason, do you think this is warranted?
I think people delayed purchasing a phone for quite a while. And the phone with the new software system is compelling enough to cause you to upgrade. It's not revolutionary, but it's a good product.
Mike agrees, I guess.
I do think the software improvements have been significant, and I think it's good for Apple.
Other news on the page?
Yeah, Tesla had their earnings last week, and they beat revenue expectations, but profitability was not quite there, though cash flow was actually fairly good. They talked a lot in the earnings call about what the back half of the year is going to look like, what their plan is for Cybercab and the robotaxi. It does seem like, and we've talked about this before, it seems like Tesla will be buying a bunch of its own cars and plans to ramp production through the back half of the year or through the rest of the year so that they can scale the robotaxi product. On Cybercab, they did talk about that. There are some rumors that they're going to release a model of the Cybercab with a steering wheel, which may be required in some states. Maybe it's a regulatory issue. And then the other thing that they spent a lot of time on was batteries, talking about batteries for stabilizing the grid and basically increasing capacity of the grid due to the usage patterns. I think that was overall pretty interesting. The other thing for page 1, I kind of assume page 1 is OpenAI, is part of this restructuring of OpenAI. The Benefit Corporation, which now owns $130 billion, is about their stake in the for-profit corporation. One of their mandates is, and they're committing $25 billion to it, is for health and curing diseases. The OpenAI Foundation is planning to work and accelerate health breakthroughs so everyone can benefit from faster diagnostics, better treatments, and cures. So it'll be interesting to see what they do there. I mean, it's a nice war chest of funds, and I don't know, Jason, I don't know if you have an opinion on where any of this stuff's going to go, but I assume it'll get into the drug discovery side of things.
The news is all China. That Trump and his, perpetual press conference on his planes, on the planes and whatnot, is talking about having more advanced Nvidia chips available to Chinese companies. We'll have to see how it all gets reported after the meeting tomorrow, but that would be very good news for NVIDIA, I guess, rather than being kind of closed down, being unable to make sales in China last quarter. That would be a significant upside, I think.
Yeah, the strategy there, at least from a geopolitical perspective, is we want China to be operating on the same technology stack as us, because if we diverge, it's more likely, they could develop something that's totally different and we won't understand it and won't have expertise in it. And maybe they make a breakthrough that we don't. So it'd be much better if they're operating on the NVIDIA stack. And frankly, NVIDIA is pretty far ahead of everybody on the software side of programming these GPUs, which is what everybody's doing in order to make their models. We hear all these news about ASICs being developed, but all those ASICs are being developed for specialty workloads. The GPU is unique because it's programmable and flexible. And by keeping the Chinese population working on the NVIDIA platform, that's generally good for everybody. Obviously good for NVIDIA shareholders, assuming they can increase supply beyond demand, which has been their challenge so far. They did give some numbers on Blackwell, and they reported that sales to date plus bookings have now eclipsed $500 billion. So, the scale of these operations is just pretty phenomenal, and that doesn't include additional sales to be made throughout the life of that product.
I was going to say, when you talk about scaling, only one company can make these chips that all these different producers are clamoring for, and that's TSMC. So really, they're the bottleneck at this point.
Currently, yes. And they also reported earnings last week. Profit jumped 39%, guided their CapEx to the high end of the range. They're notoriously tight about giving guidance until the end of the year. So we don't really know what they're thinking. But what they did say that was interesting is that AI wafer demand is growing at a CAGR in the compound adjusted growth rate, compound average, the mid 40s. That's already a significant part of their business. So they're looking at having to increase a significant amount of supply. Oh, and the other thing that I should mention is NVIDIA's Blackwell is now being manufactured with chips coming out of the Taiwan Semiconductor Arizona plant. But of course, that chip has to be shipped to Taiwan to do the advanced packaging and then shipped back over here. Still a very global system, but some progress is actually being made to reshore production, which is pretty phenomenal.
Like 3 minutes left, Jason, for healthcare news.
Sure. An interesting development is Express Scripts, which is a PBM owned by Cigna, has decided they're going to do away with their rebate model in the year 2028. So it's a little ways out, but it's progress. The estimates are this is going to save 30% on branded drugs. So I think this is really the first time a PBM's admitting that they are a cause of a significant increase in drug pricing. And they're going to move to a cost plus reimbursement model for pharmacies, which is also a great thing because it's not uncommon that they reimburse at a rate that's less than the pharmacy's cost of the drug. And that's really the impetus that it causes a lot of mom and pop drugstores to go out of business. So I think they're feeling the government pressure and actually making adjustments.
Yeah. So just to recapitulate, next week we'll do more blockchain and some commentary on stablecoin and how well secured stablecoin providers are and how this may fit into adoption by U.S. banks. And then the following week, we'll do TSMC and this new venture effort to try to figure out another way to make chips. And then I think we're going to stick with this 10-minute segment. We'll do our best to come up with the most interesting things possible. So after next week and after TSMC, we'll come up with something hopefully equally interesting. And with that, everyone be well and stay healthy. And thanks very much for listening. Take care.
The views expressed on this podcast are the hosts alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the hosts nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed.